Hello, everyone. My name is Caleb Tingstad. I am a lawyer at the law firm Beresford Booth in Edmonds, Washington. And today we're going to talk on a broad level about compensation for basically for business owners, shareholders and corporations, members of LLCs, and the like. I want to start with the why behind why we're having this conversation today. Especially, I think it's really important that practitioners have a good understanding of at least the basics of the way that compensation works for business owners. These types of things come across in all areas of the law, whether you are a transactional lawyer or a litigator, someone who practices family law. They are having a good understanding of compensation can be useful in a variety of different settings, and that's why I think these types of things are important and to at least have a good understanding from a broad level. And so today, this is a bit of an oversimplification, but there are a couple of categories here when you talk about business owner compensation. And one category here that I've referred to as distributions is essentially the concept of someone receiving compensation in accordance with their ownership interest in the entity. So a shareholder receiving potentially dividends, a partner in a partnership receiving distributions, those types of things that are that come from the ownership interest itself. And the second part of the compensation that we're going to talk about on a broad level is salary, which is also known as guaranteed payments, depending on the type of entity that you're talking about and the manner in which the owners choose to have that entity be taxed. And so the distributions are generally tied to ownership, whereas salary and guaranteed payments are normally tied to the services that an individual provides on behalf of the entity. So first here, talking about distributions, as I said earlier, these tend to be related to a person's ownership interest. And you see I've got some references to Washington law that specifically defines what distributions are, both within the context of corporations and LLCs. There are other statutes that we have, the limited partnership statute, for example, that will also reference distributions, but these are the main ones that we come across. And it's important to have a good understanding of what constitutes a distribution, because there are significant limitations on distributions under Washington law, whereas with salaries and guaranteed payments, those limitations don't apply. So when we're looking at a distribution, both for corporations and LLCs, there are limitations that come into play, essentially that relate to a company's financial situation. And there are limitations on distributions for when, for example, if a company can't continue to make payments to its creditors that it has in the ordinary course, or if, as a result of the distribution, liabilities would exceed assets. And that's a little bit of an oversimplification, but that's the general gist of some of the limitations that could be on distributions. And that can have an impact on the rights that creditors for a company can have. I mean, it's also really important because this is one of the few instances in both the corporate statute and the LLC statute where Washington law imposes personal liability for these violations. And that's why practitioners should have a good understanding of the broad strokes of these types of things, because we want to make sure that we're counseling clients correctly when there are issues that could potentially have personal liability if not handled correctly. I throw a note in here about tax implications. I generally defer to CPAs when it comes to actually determining tax implications. I like to say that I know just enough to know when to call an accountant. But the tax implications with distributions can vary depending on the type of entity and the manner in which it's taxed, which is important to understand as well. Now moving on here to salaries and guaranteed payments. These are generally associated with a shareholder or a member's performance of services to the entity, rather than based off of a shareholder or member's percentage interest. These can come in a variety of different ways. Sometimes in real estate syndications, you see them as management fees for managing the building. Sometimes, for just normal operating entities, you have this as a salary, sometimes with bonuses and whatnot. And these tend to be fixed upfront, negotiated upfront, and rather than changing during the course of a year, for example. And from a tax perspective, these are generally taxed as ordinary income, and they also can have treating compensation to owners as salaries can have beneficial tax consequences to the entity itself, because it can reduce the entity's taxable income, and because you can book the salary as an expense on the books of the company. And so to wrap things up here, I want to reiterate that I think it's very important to know the basics of compensation so that practitioners can at least have an understanding as to when an issue arises, to know when something comes up. Going back to the distributions, there are legal limitations on when distributions can and can't be made, and there's personal liability for those violations. And so we want to be really careful with understanding what we're doing and why and how we're counseling our clients. The QR code that's on the screen is a link to my contact information. My practice is one that I regularly come across these types of issues. I regularly handle shareholder and LLC member disputes where compensation is normally right at the center of those types of cases. So I come across this all the time. My contact information is on the screen, and I would be more than happy to assist if any of you all have questions. And thank you for taking the time today, and really appreciate your attention today.